everybody. Welcome to Monday Morning Must-Knows. My name is Merlin Rothfeld, and here are 3 important things to pay attention to for the upcoming trading week. Now, before I dive into this excitement, I want to go back and rehash what we talked about on last week's Monday Morning Must-Knows, which was increased volatility. We talked about the debt ceiling. We talked about some of the infrastructure bill problems, and boy, the expectation was a lot of volatility. We nailed that one by big up days, big down days, huge volatility, hopefully some great trading opportunities for you as well. Now this week, we don't have as much heavy-hitting macroeconomic pieces like that, but I do have some very exciting things. Let's start it off with earnings. 55 companies are reporting earnings this week. Doesn't seem like a lot, right? It's just, it seems like the tail end. Well, when you see Fastenal reporting on Tuesday, you're like, that's it. It really starts off slow. Now we begin the deluge of earnings. It's beginning, folks. If you look here, all in red, we're going to have our financial firms. You've got Bank of America, JP Morgan, Goldman Sachs, Blackrock and Wells Fargo. You've got Delta Airlines and Progressive. Wednesday is the motherlode of financials, which could really steer earnings season. It always tends to kick off earnings season as well. Thursday, we're not done. We've got Citibank. We've got Morgan Stanley, USB, which is the 5th largest bank in the United States, that just said that they will now take custody of cryptocurrencies. Thought that was interesting as well. You have Alcoa, Walgreens, Boots Alliance, and United Healthcare. And then on Friday, PNC Financial and JBHT. So earnings starting things off with a bang with major financial news. It should be exciting for anybody trading XLF or these bank stocks. Now, let's talk about the I word. That's right, not me, myself, and I, but inflation. That's our next topic, and of course this week we've got 2 major announcements as well. Consumer Price Index Wednesday at 8:30 Eastern Standard Time, and then on Thursday you have Producer Price Index at 8:30 Eastern Standard Time as well. So let's look at the charts and see why this is important. Well, Consumer Price Index, as you can see, has been fluctuating wildly above and below zero. But what's noteworthy is what's happened really in 2021. We saw this nice rise up in inflation. People worried that this inflation is going to impact and the Fed will have to step in and raise rates. But notice the last 2 readings have been sharp declines in Consumer Price Index, maybe tapering inflation fears. But wait. When we look at the producer's side of things, it changes dramatically. Here's your Producer Price Index, which is what it costs these producers to manufacture or produce a basket of goods and services. And you can see that is still rising. What I can tell you is this. As a business owner, if your costs are rising and rising and rising and keep on rising, at some point you're going to go, you know what? I'm not going to absorb this cost. I will pass it on to the consumer. So one of 2 things is probably broken here. You see Consumer Price Index looks like it's dropping, meaning you and I are paying less for goods and services, but the producers, it's costing them more money. So either the PPI numbers are going to have to drop sharply to come in line with Consumer Price Index, or Consumer Price Index is going to start to rise to get in line with PPI. Not sure which way that's going to happen, but we'll get some clarity on that on Wednesday and on Thursday. Now, our final piece of news deals with consumption. Again, retail sales numbers are our final piece. As you can see, it's been obviously bouncing above and below zero, but what I wanted to draw your attention to was what's been happening over the past 3 or 4 readings. You can see on the hard red edge there, right now we're at 0.07 with regards to retail sales. It's above the zero line, and that's great. We want to see consumption expansion in the retail sales category. But what's noteworthy for me anyway is those little gold bars or orange bars below zero over the last 4 months. What does that mean? That means that the industry has set their expectations so low that any jump up above positive is going to be a nice big boost for at least the optimism of our market. It's kind of the psychology of how economists are playing data against the general population. So while having a low retail sales numbers might not be great, it certainly looks better when it's better than the low expectation. For example, if they say we expect retail sales to contract by 0.1% and it comes out at zero, we have no economic growth. Retail sales is not increasing, but it's better than -1, and markets like that type of news. So as we walk into the announcement that's coming up this week on Friday at 8:30 Eastern Standard Time, be careful for the retail sales announcements because, again, earnings season is starting, and we're going to see a lot of companies reporting earnings in the next few weeks. That, my friends, is Monday Morning Must-Knows. We'll see you next week.